Good afternoon to all my MMTs in the United States, all of our international traders around the world, as I'm going to show once again this daily chart on the S&P 500 index. And not only that, I'm also going to do this. I told everybody on stockmarketfunding.com and all of our traders that we were going to go down considerably in the S&P 500, and we had a 200-point reversal to the downside in that that whole daily, weekly, and monthly. If you want to type in here and go back and watch all of the analysis before the fact, I said before the fact, not after the fact. S&P 500, here's one here. Here's another one on the Dow. I mean, there are several of these index updates that we give to all of our traders, and we have not missed a beat yet. So if I were you, I would do the following. If I were you, you deserve to be in these markets. Click the free trial. Bam. You click the free trial, get started. You can read the content. You call us. You go to the trading. You go to open an account. You hit open an account. You read the print. You watch the videos. Open an account. Click that tab. Get started today. You will not have to be burdened any longer. We will give you buying power. Yes, we will. So let's say you have a $5,000 trading account. We're going to give you $50,000 intraday to start with and up to $100,000. So we will fund your trading account. Here's your pattern day trading rule for those people who have accounts below $25. They get stuck in all these retail trading platforms. How disgusting. There's nothing direct to the floor with this stuff here. So make a decision. We will give you the trading capital, and we're going to go back to this S&P 500 chart. When I called for that reversal, and all the proof is right there on the website. So basically, I'm going to go over here, and I'm going to show where we hit on the high 2019 on the S&P. And during that phase, we were already in overbought territories. We started the reversal right here, and that was on 9/22. We had a small, and just remember, this is just a daily, but here's a big day right here. It all started again right here, and that was on 9/25. The high was 1997, and the low was 1965 on that day. When we really threw a cliffhanger on the daily, the high was 1967. We came all the way down. We came below the green line, the simple 200-day simple moving average, which is still at 1905. We undercut that. So there's that 200-point reversal. That's number one. Now we're running right back up here and these daily moving averages. Here's a 100-day, a 50-day. The red line is a 20-day. The green line is 200. And the blue line is a 10-day. And the white little yellow line right here is a 100-day, and that's at 1961. That is what the daily looks like. I'm going to take you to the weekly chart. I'm going to take you to the weekly chart, all my MMTs. We called this big move reversal, and once again, this low right here was 8. Well, we got right down here. I'm going to draw a trend line across here. That's the wick. This is a weekly chart. They came in, they bought it, and they ran it up. That blue line is a 10-week. That red line is a 20-week. The 50-week is the white line. It undercut it. It got back above it. There has been a lot of turmoil. Price volatility is here to stay. One of the things I want to emphasize on this white line. That's a rising 50-week moving average, which is bullish for the bulls. But up here on the top of that blue line and that red line is a 10-week and 20-week. And you can clearly see where we started this whole thing out in 2014. 2015 is what we're talking about. I'm just going to draw this little diagonal line. This is a 2014 low on a weekly. The long-term bull trends are clearly still there. However, prior to a major reversal, you're going to see the upside volatility and the downside volatility. Both ways are going to get even more extreme. And people forgot and we were testing all these lows back in 2012. Right here, we came up, we started it, bam, now we got a major reversal again. So yes, the bull line, the bull is still there. He has not gone away. There's been some profit taking in markets. I'm just going to zoom this up one more time. I'm just going to do this one more time. That is that weekly reversal. They came in, they bought that support level, and then they ran that up. You got the 10-week, you got the 20-week. As long as it stays below this other trend line diagonal right here, that's where the trend was broke right here. And once again, the bull came roaring back, and the volatility. And the bear got volatility, and the bull got volatility. Here's another thing you need to know. This is a monthly chart on the S&P 500. Of course, it's very bullish when we go all the way back to 2009. And basically what I'm going to do on this monthly chart is I'm going to do the following. I'm going to make sure that I get rid of all the trend lines. I'm going to make sure that you understand the following. And I'm going to blow it up. But I'm going to draw a trend line right up here at 2000 area where it started to break. This is a monthly chart. That blue line is a rising 10-month. That red line is a rising 20-month moving average. You got the 50-month moving average, and that pink line is rising. That's how strong the bull is. However, I'm going to draw a trend line, and then I'm going to go over those moving averages. I'm going to go over that 10-month moving average at 1915. I'm going to go over that 15-month moving average at 1515. That's this one way down here. I'm going to go over that 20-month moving average, and that's going to be at 1798. And then again, the 200-month moving average, that's so far down here. This is when we started to really clear through that volatility, and we broke out. Now that I'm willing to do that, we are in the earnings season. We have an extremely overbought market. But what I am going to emphasize is this monthly wick. This was part of the 2014. We started with the selling. We came down. We have come all the way back down. That's over 200 points down on the S&P 500 on a monthly chart. There's the peak on a monthly chart, 2019. Here's the low. Right here on that monthly, when they finally recorded it, it was at 1820. But we undercut it because we know that we did. This is the monthly cycle right now for the bear and the bull and all key parameters. If you haven't gotten in the free 5-day trial, please get here. That way, we will fund your trading account. We have market makers in the background. We've got managers that will help manage your account. We have a lot of things that are going for you, a lot of tools, and a lot of management behind you. I'm going to conclude the date being 10/26/214, and I am going to conclude, just like I said, $200 drop in that S&P. And that's what bull markets are supposed to have. Bull markets are supposed to have volatility because 98% of the people out here, they walk away from volatility. Well, that's where the big money's made. So it's the people who don't know what they're doing, don't like volatility. The people who do know, well, they enjoy volatility because they make the bull side, they make the bear side, and they make movies on how good they are. And that monthly wick right here, that's where they stepped in. And we're going to find out what happens next.